with any questions today. So let me get that rocking and rolling. I hope you guys are having an amazing week. Wow, the market is rocking. We had an amazing week with following the dark pool prints this week. A lot of our stocks just rocked on the day. So let me just get that chat up quick. And if you guys have questions, you guys know you can always ask me questions throughout. I don't have my slide to show up, but if you guys want to follow me outside of Ticker Tocker or outside of my YouTube channel, you guys can follow me on Instagram, Facebook, my website, cjanetrade.com. And we will get everything rocking and rolling here. 2 seconds. Sorry about that, guys. I was wanting another little project. All right. It's good to go. All right. So let's get into our review, right? So we're looking at the market, the analysis. We've got the support and resistances that I was talking about before, right? We had, get rid of those yellow lines, clean it up. Those are the volume profile here. It looks like now that we are above here, the next one that we might hit all the way up here at 330. But we'll go into the analysis more. Let's get rid of those lines. We might have a crazy run coming on the market. Why? Again, you guys, I've talked to you about this, that it has been a lot of short squeezes, right? A lot of squeezing that's been happening. And so for that squeezing, everybody has been thinking this market just has to drop, right? It just has to drop. This is irrational. Well, guess what? The market is 100% irrational. All right, we've got this here and it's muted. All right, still working on that, guys. Sorry. I got this. All right, so we've got this buy. Had this nice big block right here that we were going ahead and watching, right? It was 3 weeks of prints that were put in right here. We had this nice range. Again, we went ahead, we're bullish. Now we are a bit extended away. Let me turn off that VWAP because that's a gray line that I don't want to have on right now. All right, so right here, we are looking a bit extended, right? Why do I say extended? Well, every time that we go away from the moving averages, it's sort of got that rubber band, whoop, comes right back to those moving averages. Today, we had a very big gap up, lots of movement based on the unemployment numbers, but really was it the unemployment numbers? No, not so much. It was more the prints that went ahead and set up the move for us. So let's go ahead and hide that VWAP. All right, and when we look at it, yes, it makes perfect sense, right? When I was talking about it earlier this week on Monday, I said, hey, listen, we have that potential to go hit that 308 mark. Sure enough, we did on Monday. Then that 311, yes, came back down to the moving averages. Could have been a gap fill to the downside. However, they squeezed those shorts. They squeezed everybody, right? And they didn't just do it on the indexes, right? They did it on the stocks as well. So when you're looking at all of these, you guys have always heard me talk about, I mentioned ETF database last session on Monday. And we were talking about Microsoft and Apple, how Microsoft and Apple were 2 of the majors to really watch. So let's go ahead and check those out as well. So we've got Microsoft here on our daily chart. It's just been hovering. However, we broke this downtrend here this day. We sold off and we were consolidating, bounced off of this trend line, and we're riding this 21 EMA right on up. Now we're at almost all-time highs, right? We need to break out that above that 187.50 for it to really surge and again squeeze those shorts. I mention it all the time. Everybody wants to try to peg the top, which is why so many people have been getting into short. They think, oh my goodness, unemployment's up. It's going to be awful. In the trading pit, I just did a presentation about FOMC, Federal Open Market Committee, and how they can possibly stimulate the economy. The 2 ways that they can really stimulate the economy, cut the interest rates, what does that do? That's going to put more hands back into the people, or so they can go ahead and buy the federally backed securities. So you have to think of it this way, right? If the Fed is issuing out securities, what's it going to do? Well, they're selling a physical product and they're taking back cash. So that will take money out of the economy. When they do the exact opposite, if they're going to go ahead and buy that physical product, so think of me buying a car from you, what are you going to end up? You're going to end up with money, right? So they are, when they're buying all of these federally backed securities, they're giving that money back into the economy. They're stimulating it so that people have that money to go ahead and spend it. So all of the meetings, they have 8 scheduled meetings a year, right? So when they have to abide by that 8 meetings a year. However, they can throw in meetings whenever they want. When we look back at the March schedule, they had 4 meetings, all because of what had happened. They went ahead, they stimulated the economy. So is it any wonder that the market has reacted the way that it has? No. The Fed is propping it up in the moment, in my opinion, because they are buying all those securities. Now, what is going to happen when we start to have those second quarter earnings reports that are going to be coming out in July? We might see another downturn. At this point, looking back on the indexes overall, we are surging higher. Everybody's talking about that 50-day run up. Well, we're here. We've gone ahead. Let me get rid of this trend line here. Remove. Okay, we're surging up. We might go up, test the 323 area, even on up to 332. You guys might be saying, Jane, it's crazy. It's really not crazy. As long as you're following the prints, you're following the dark pool, you can go ahead and surge forward, make some amazing profits, right? Who would have thought that we would have gone up today 8.5 points when we were talking about this COVID-19 pandemic, everything? Nobody thought that. And you guys know I do track the short volume, right? So when I look back at, this is a SPY, the QQQ, IWM, DIA. I've got other ones that I've also analyzed as well. However, when you look back at them, you can see the entire time since February, the SPY has been over 50% short each week. So in essence, we are having this major short squeeze. There was 1 week with 2 weeks, excuse me, right here, with 3 weeks, correction, 3 weeks with NASDAQ, QQQ index, ETF, that we were below 50%. However, people are still thinking that this market is going to go down. Again, that's going to fuel the market going up. What I found really interesting as well is that you look and you say, hey, okay, yep, everybody thought the market's going to go down, so they're shorting. But when you look at the individual stocks, the top 2, Apple and Microsoft, hey, there's more confidence. People are actually buying into these. So there was a divergence of what's going to happen. People were shorting the indexes. However, they were buying the big names in it. Those are also technology stocks as well. And they're going to pull up the Qs, but as major holdings in the SPY as well, it's going to really pull it up as well. If you guys have any questions as well, just go ahead in the chat. I do have my YouTube up as well. And let's go ahead and look at my list for today. It's going to take a second here. Some amazing trades, right? So I've been watching Tesla. Tesla had amazing news. You guys might know I have a small position on with Tesla. It did pull back on the daily chart. We came back. We were a little extended. We've got to break and close above this trend line here with some more volume. After that, in my opinion, I feel like we could easily go ahead, hit the 925 area, 950, 960, 975, even potentially 1,000 very shortly around the corner. Why again? The shorts get stubborn, right? They're the top car for the Model 3 in the UK. So all of this positive news could fuel new investors to come in, buy in, and squeeze the shorts yet again. All right, CCH today. So CCH had a major gap up at the beginning of the day. Now, I also do this newsletter live on my Ticker Tocker channel every morning that the market is open. So you guys can subscribe to that on Ticker Tocker if you want to see me building it live and go ahead and see the potential moves. Pull this up over here so we can see it at the same time. All right, so we've got it right here. So I had bullish above 1225. Sure enough, we broke that, right? We broke it right here in the first 45 minutes of the day. I'll make a 15-minute chart a little easier for most people to read. Also, love. Airline sector is moving. I know somebody that flew again on last week on Thursday, packed, absolutely stuffed like sardines. I used to work in the airline industry. They say, hey, the airport looks like this pandemic is done. Nobody cares about this pandemic. It's full house in the airports like usual. So that's very interesting to hear. Even though I'm not traveling, I can hear what's going on with the population, with the airlines. They're still cutting back. They're still planning on doing cutbacks. However, for now, they are having full ticket sales, which is good, according to their seats being full. Now, American Airlines as well. So we had love. Hey, if we break that 41.80, well, we didn't break it, but it would have been a good potential short entry, right? Come on down, test that low 38.80. You've had a nice $3 short to the downside. These levels are going to be a higher probability trade. If it breaks out above that 41.80 and it's able to hold it, there's a very good chance that it could go ahead and have that momentum to the upside. However, you want to respect that. You want to respect that as a stop as well. American Airlines as well. So we've got American, same thing. The airline sector overall started to pull back a little bit today. Is it any wonder when we look at their daily charts? You can see, hey, look, we hit the 200 simple moving average. Awesome target. However, pulling back a little bit. Are we going to close below these EMAs and go ahead and fill that gap down? This could have a nice move down to that 1550 area, down and then proceed up again. Like I said, every time that we're really far away, we have that sort of rubber band effect where it's going to go ahead and snap back to those moving averages. So if you're thinking, even in longer term investing, would you want to get in up here or would you want to get in right here where it's really close to the moving averages? It's just crossed up. I think you guys can see that your risk would be lower when you're going to enter down here, right? Now, we have Bank of America, Boeing. I don't know why I said Bank of America. Right up here, again, amazing move over the $200 mark. Nice move to the upside. It went all the way up to 218 today. So you could have made a nice 10% profit on Boeing, a $200 stock. I mean, we're seeing some amazing moves today. Boeing's also going to have a big influence on the indexes. Now, like I said, we are overextended on some of these. We could have a pullback, meaning there might be that potential short overnight swing trade to go back further. Many times when you start to see the 3 white soldiers to the upside, you're going to have that potential pullback the next day. So could pull back and fill that gap today. If you guys do that trade back to the averages, know that you're going against the trend. That trend is going to the upside. If you are aiming for a target, right? If you're aiming and you say, hey, I want to go ahead and put 187.20, 187, we'll say, know that that moving average is going to continue to move up. So if that price action closes a bit stronger today, that moving average is going to move up. On Monday, you could see that that moving average is up here around 192, 194. So be conservative, in my opinion, with that target. Know that your target is going against you, if that makes sense. It's going to be going in the opposite direction. Now, when we look at Apple as well, you can see it had a nice candlestick, right? And it's a solid bullish engulfing, went ahead, took out, and we're hitting all-time highs, right? So same thing with Microsoft. So these are not over, they are further away from the moving averages. However, it's not a real gap up to that high price. When you tend to have that gap, like right here, for example, you see every time you have this gap, it'll come back many times. With the buying power, you see that buying wick right there. So keeping that in mind, we also have Carnival. Carnival is rocking. I've got a position on this one, full disclosure, to have a potential retracement going into next week. Why? Simple reason, like I said, this one had a major gap up, and in my opinion, I feel like it's going to pull back further before it surges higher. The 3 up days, potential pullback, and then surge even further. It'll get more fuel. There could be some profit taking that happens later on today. At the end of the day, at 3 o'clock, we do have announcements coming out. I forget which one it is. I believe it's New Homes. Let's look. Forex Factory's great consumer credit. So that consumer credit announcement, we had previous at negative 12 billion, forecast to be negative 20 billion. So if this is a higher negative, it's going to be detrimental, right? So that could have some fireworks into the close with that 3 o'clock announcement. So keep that on watch. Be prepared, especially if you're in the indexes, that you might want to close out a position if you're long and protect those profits, depending on what it is. Does anybody have any questions? Out there that I can answer. So the shorts today, I had Microsoft as a short, but you know what? Microsoft ended up breaking the level and a great long. So you guys can see when I have something that has these potential support and resistances to be broken for that day trade, it could go either way, right? It could surge to the upside or it could drop. It's going to be where that volume takes it, but be prepared both directions. If you're prepared both directions, you're going to have a higher probability of being profitable. All right, Mike or Zach, do you guys have any questions? I need to pull up my Skype chat that are on your end. Nothing on your end. Okay, cool. Also, we just wrapped up the boot camp. Some amazing new traders about the dark pool. If you guys want to learn more about trading around the dark pool, come and check us out. We got prints on Carnival, prints on Verizon, prints on Apple. So we knew that there was a big move coming with Apple. Again, when that big move is going to happen on Apple, it's going to happen on the indexes. So try to keep all that in mind. Come and try it out and see if you guys like the dark pool. You'll see that when you're trading with the guys that have billions of dollars, we had over 1 million shares on Apple, right? So you're looking at $3 billion worth of, or 300 million, excuse me, $300 million worth of Apple stock. Do you want to go against that? Do you want to go short thinking that the market might go down, or do you want to go ahead and follow those really big guys and just move with them? Hey, if they take it up and then we start to see a massive curl down below that price, we try to keep it easy. We go below that price, then guess that was selling. They were trying to bounce it up to potentially sell more. All right, I'm going to go ahead and wrap it up for today, guys. If you guys ever have any questions, you can email me at jane@cjanetrade.com, and I'd be happy to answer your questions. And you can check me out live here on Ticker Tocker at 12:45 on Mondays and Fridays, and also on Sunday afternoons, 1 to 2-ish, depending on when my kids take a nap. All right, have a great weekend ahead, and I will see you all on Monday.
The risk of loss in trading commodity interests can be substantial. You should therefore carefully consider whether such trading is suitable for you in light of your financial condition, and considering whether to trade or to authorize someone else to trade for you. Past performance is not necessarily indicative of future results.
The Ticker Tocker app brings the powerful trading technology tools of the Ticker Tocker desktop platform into the hands of its users who are on the go. Ticker Tocker connects novice and advanced traders with industry leaders who are providing real-time trading content throughout market hours every single day. The Ticker Tocker app allows traders to follow and get real-time push notifications of trading leaders' trade ideas, all while on the go. Ticker Tocker leaders host interactive live trading rooms which provide all-day coverage of their trading ideas and methods seamlessly with social chat for real-time feedback from the expert community of Ticker Tocker's powerful user base. Set up and/or subscribe to automated trading strategies to mimic the decisions made by trusted professionals automatically. Powering up your trading AI has never been this easy. We focus on intuitive trading efficiency so you can focus on what matters most in your life. The world's most powerful trading technology is now in the palm of your hands.
Let's bring in Stephen Kalajian, who's going to help us continue to analyze what we saw in broad equity indexes over the last 5 days, as well as a couple stocks that he's got his eyes on. Stephen is the chief market strategist and co-founder at Ticker Tocker. Firstly, on the broad macro perspective, do you look at the sideways action we've had as a slowing of the rally and a slowing of the momentum, or just an uncertain pause?
I think it's the slowdown that we're seeing is more or less a consolidation here. I think we're probably headed just a little bit higher before we top out short term, and then head lower into the summer.
So what will be telling you if that turn is coming? What are the signs you look for to see if rally turns to consolidation, which seems like where we're at right now? But what do you look for to see if consolidation turns into selling?
So I use my own predictive analytics, and what my charts are telling me that basically we're at a probably somewhat of an extreme overbought condition. Not to say you can't get another push up. I'm hoping we get a push up above 3,000 on the S&Ps, maybe 30, 50, but then again, I think it'll be short-lived. You have a ton of overhead resistance. And then I'm looking for the weekly, on the weekly charts on the spiders, there's a gap at 240, 47.95, which is 47 points lower. And I do believe that that gap will get filled before we could trade higher. Right now, I think what's pushing the NASDAQ up is obviously names like Facebook, Amazon, and Microsoft are really giving that index a boost. But the overall S&P 500, looking at the pullback that I think we're going to get sometime in the next few months, should make a higher low, and that should be a little bit above 20,000 before we then can trade higher.
So you're talking pretty short term here, almost like intermediate term, and not something that's going to push us back down to the lows.
No, I think the lows are in for the year. I don't think we're going to see those lows. And just like I thought that when oil, last time I was on, I thought oil will get to, on the June oil will get to the 8 to 10. On that exact day I was on, oil got down to 652, I believe, and then rallied all the way up to 34 on the June contract. So right now, intermediate term, I'm thinking next 3 to 4 months that we should get some type of a pullback. Again, a push up higher, and I think that then another push down. I think it's going to take a while for the cycle to play out and then to resume the uptrend later on into the end of third quarter, early fourth quarter.
Right now, you mentioned the tech. Obviously, we know that's done really well. Does that momentum look like it's still strong? Can you continue to ride the momentum there, or should investors avoid the leadership that has showed kind of very early signs of maybe just cracking a tiny bit this week?
Well, I think of all the indexes between the NASDAQ, the Russell, the S&P, and the Diamonds, the Dow 30 stocks, I think that's the index to buy on the next push down. I think those names like Microsoft, Facebook, Amazon will obviously propel the market. I think that's my favorite index if we do get the pullback I'm looking for. So those are the names I would be looking to buy on that pullback. And then I think the Nasdaq then will lead the charge.
Right. You've got a few other stocks I want to make sure we hit that you got your eyes on. Boeing's one of them. What do you think? Is Boeing dependent on a fast and surprisingly good recovery to this economy, or is the worst past for them?
I think the worst is past, and obviously the government's behind Boeing. Today, on the opening, we had a short on the opening. It opened at 141. It traded down below the 136 level and then bounced towards the end of the day. I think there are better names out there to play on the pullback. I think I would look to avoid airline stocks, and especially this industry. But it's a great intraday trading vehicle, and that's what a lot of people look at because of the volatility that Boeing does have throughout the day.
Goldman, another one on your list that you were trading today, flat on the session. We saw banks get hit a little bit today. Goldman at one point was down $178 this morning, but it's been one of the best performing banks since the low. What do you think about Goldman?
So we had a sell signal on Goldman this morning at 10:15, and we shorted the bounce above the 179.50, and then we covered right around the lows around the 178.30, 178.20. So it's a nice trade intraday, and but again, it's going to go, obviously being part of the